Thank you once again for downloading this particular recording on financial reporting. I want to continue dealing with published accounts. I already sent you a number of questions on published accounts, and I hope that if I can send you this one as well, we can make some headways. Before us is the question Thistle Limited. And the requirement, of course, is that we should prepare in a form suitable for publication the statement of financial position and the statement of changes in equity for the year ended 30th June 20X1. Of course, we have got our trial balance. At your own time, you can always read through. I like to go straight to the notes and just discuss some issues there. Note 1 says the following transactions have happened during the year in relation to non-current assets, none of which have yet been recorded in the books. Okay, so the first one is the land and the buildings were revalued on 1st July 20X0. The building value was unchanged, but the land value increased to 800,000. Ignore deferred taxation on this. So this revaluation takes place a year ago, or took place rather a year ago. So what we have here is the registration in other comprehensive income. Of course, in my statement of changes in equity, I should be able to reflect this increase, but we must take note that property must increase by a sum total of 800,000. We are also told that motor vehicles, which had originally cost $24,000, were sold during the year for $12,000. The accumulated depreciation for this asset was $14,000. and had been charged on motor vehicles as at that date, that is 1st July 20X0. So of course, we might as well assume in this case, although the statement is not there, we can make an assumption just on this point that we should charge 4 years depreciation in the year of purchase for this asset and none in the year of sale. Now, I'd like to draw your attention to some things. Number one, the asset originally cost $24,000 was depreciated by $14,000. Therefore, the CV of this asset, of the carrying amount, the net book value is $10,000. So $10,000 compared to the amount of cash that you received, I hope that you can see that $12,000 there, means that you have got a profit on disposal, a profit of about $2,000. That profit must be credited to the profit or loss, all right? And of course, we need to remove this asset, recognize this asset from our records. That will be your job now to do in the financial position so that you can respond, so that I can pick it up from there. The depreciation rates are given. Building is to be depreciated at 2%, motor vehicles at 20%. All right, and then 3 says the directors have estimated the company tax liability stands at 18.5, and the deferred tax balance is estimated to be 18.1. Of course, the tax liability is a current liability. For your deferred tax, you must make sure that you compare your 8.1 with the figure that is in the trial balance. Already we can see there that there is a drop in our deferred tax of about 300. So 8.4 minus 8.1, 300. That will mean that there will be a reduction in the figure for tax for the current year, as we shall see very soon. 4 says interest on the loan is paid per annum in arrears on 1st July, as well as the 10% coupon rate. The loan carries a large premium on redemption, giving it an effective interest rate of about 12, and so that 12% will be our focus. We are going to have to apply 12% on our principal borrowed funds so that we can find our finance cost. Now, when we go to the financial position under non-current liabilities, I'd like you to remember this. You're going to have to find your figure for your non-current liabilities by doing the following. You get the figure for the loan, okay, and let me just ensure that I check that one out, and then I'll give you some bit of instructions, and then we're going to go to do the question. So the figure for the loan is about 80,000. So what you do, you get 80,000, then add 12% of the 80,000, and then less 10% of the 80,000 in order for you to get the figure to put in the financial position. Those are instructions. 5 says during the year 100 ordinary shares were issued at premium of 40 cents per share. This share issue is reflected in the trial balance. So all we need to do is to predict opening balances. In this case, that is where the catch is. I'll show you what to do in a while. And then 6 says the investment value 31st July 20x1 was calculated as 2200. This is a financial asset, I suppose, and so you must compare that investment value with the value that you have here, that is your 19.8. So 19.8 compared to that, of course, we should be able to see that there is an increase. That increase should be treated as a credit in the statement of profit or loss. Of course, we must make an adjustment to our profits. Now, this question does not ask us to prepare the profit or loss, but what it does is that it asks us to, of course, take into consideration all these adjustments, meaning that what we need to do is to find the draft profit, in this case, draft profit or loss, then run with it, adjust that same draft profit, which is this figure here, adjust this figure for all these items mentioned. So I'm starting, and I hope that as I'm doing this work, you will be reminded of what we have discussed. Okay, so let us revise our profit. I've got my trial balance figure, which I'm just from making reference to. Let me just go there again, 160. I hope that you can see that figure, 500. 160, 500. Let me just write that one. Right. Lagged progress to the next item. I've got the issue of the profit on disposal. I think we discussed that. And please be making reference to your question. All right. Our profit on disposal is based on the fact that our assets, all right, carrying amount was about 10,000 and the money that we got was 12,000. So if I may just write this one for us, we sold an asset for 12,000, which had the carrying value of about 10,000. So definitely, I think you can see with me here that we are dealing with a profit on disposal of about 2,000. Okay, next, what do you have? You have got a depreciation. Depreciation, we need to remember that the value for building remains the same. Okay, if I say depreciation on property, I'm referring to the building component. I hope that you'll be able to remember that. So when I turn to my trial balance, I really discover that the land element is 700,000, and therefore the building element is the same, because remember that the total is 1.4. So let us deal with the building element, which is $700,000. All right, then multiply what you have with the rule. I think toward the 2% in the question. So again, see, this is just Excel. I think that you can always get that one right. I've got my figure there. Of course, since this is an adjustment to the profit or loss, I'm going to reduce my profit or loss by that amount. Okay, by the 14,000. I go on further to deal with my motor vehicles. Now, on my motor vehicles, I remind myself of, in fact, to say depreciation of motor vehicles there. I would like to remind myself of the fact that there was a motor vehicle which was disposed of. Therefore, I'm well aware of that, so that for my workings, I proceed as follows. Say, open major brackets, and I say, what was the cost in the trial balance on the debit side of motor vehicles? We have got 67,500 minus a 24,000. All right, 24,000. Then what else do we have? We have got the depreciation. Credit side of the trial balance, please check that one. All right, minus, of course, the depreciation for the disposed. All right, I hope that you can see that. And then I close brackets and multiply. You see, whatever I have against a rate of about 20%. I think that when you do the maths, you will really discover that you'll be getting a 5,450 at your own time. Okay, I want us to progress. Finance cost is the next item, and it will be based on the effective interest rate. Remember, our principal in this case is 80,000. Due to a premium in redemption, we can't use the nominal rate, so we use 12%. So what do we have? We have got 80,000 multiplied by, okay, can I just do that one again? I've got 80,000 multiplied by about a 12%. That gives me about 96, and of course that is a reduction in my profit. So I less. Where do we go from there? We've got the investment, the movement in investment. So that is equity instrument, equity asset, financial asset. I think we need just to make comparison between the new figure which is mentioned in the note against the trial balance figure, which is a 19,800. Okay, so if I do my workings again, 2,200 minus 19,800, I'm getting a 400 increase. Then finally, I've got my tax. So tax charge, what do we have? Of course, the 18.5 is the estimate. Now, I remember quite well that when we dealt with our deferred tax, we talked about the difference between that figure and the figure that is mentioned in the notes, which in this case is 81. So the difference between 84 and 81 is clearly a 300, which is a reduction in deferred tax. So that our deferred tax will be the difference between 18.5 and 300. That gives us 18.2, and of course that is a charge. So we get it in there as a, I need to create some space here. All right, insert, there we go. So I have got 18.2, and this of course is a minus. Okay, so we are almost there. We are almost done. What is the revised profit? That's a nice question. So the revised profit will be the summation of all the items that we have done so far. So I'm going to just copy everything there so I can get my 115, 650. So that's what we have there. I'd like for you to remember this. Now I encourage you, please. You can never know financial reporting. You can never be an expert in this subject if you don't follow the instructions. The instructions are that when I do my key workings like this, you need to rewrite these workings and then complete the statements. Come up with your own questions. So now I would like to also do as a bonus with you the statement of changes in equity, and then I'm going to close. All right, because I understand that students find it a bit difficult for them to navigate around this. I think for our first lines, remember the statement of changes in equity is simply that statement that shows us the interest of shareholders in the business. So we have got a couple of columns that we need to deal with here. We've got share capital, share premium, liberation surplus, retained earnings, and then we have got the total column. I'd like to remind you that the examiner was clear that the additional share issue was already accounted for, meaning that our figures in the statements in the trial balance rather is correct. So when you consider your trial balance, you discover that your share capital is about 500,000 and your premium is about 100,000. If you want, you can check that at your own pace. You see, I'm talking about that. So ordinary shares 500 and premium is that. It was well accounted for in advance. Okay, and what we need to know is that in light of what has been said, we need to find the opening balances, and of course that's not a difficult thing because you have been given again the additional share issues. 100 shares were issued during the year. Of course, we know that we are dealing with shares whose par value, if I may just check with you, is about 50 cents there. So you need to be a little bit careful there. So if the shares par value is 50 cents, then what's the value of 100 shares? Of course, we multiply 50 cents, $0.5 by that much, we'll be getting a 50,000. And then we are told the premium of what, 40%, or indeed 40 cents applied to this particular issue. So you say, if that is the case, then I have just to multiply that figure by let me just get that one. Say get 100. Yeah, I need to be a little bit careful there. 100, of course, by 1.4. That gives me a 40. All right. So that's what I have there. Now, for you to find the final figures, this is what you're supposed, the opening balances rather. This is what you're supposed to do. And these questions are common in the exams where you have to find the opening balance. You say opening balance, therefore, will be equal to this figure, okay, minus, I think I should say minus that figure. Yes, so what we can conclude here is that we open with 450, because if we add 450 to 50, we are getting a 500. We do the same for the other, that figure minus that figure, we are getting about a 60,000. For the revaluation surplus, please check your trial balance. On the debit side, you open with a 300,000. On the credit side, rather, a 300,000, and we are told that during the year there was a revaluation. I think I saw that note, and also you saw that note, a revaluation that resulted in us having what the land was increased to. So if land is increased to 800 and it was 700,000, then it means that we have increased it by a 100. As simple as that. Our retained earnings, something that you can always check as well, stood at about 540,000. You can check that one at your own time. 540,000. All right, what about total comprehensive income? Now it is here where you bring in this figure here as the profit for the year, and then we have to deal with dividends, of course, which I didn't see. There was no mention of dividends. After having done that, all you need to do is to sum up. All right, you get your figure there as your sum of all opening balances, and then you cut across there, and then after you have done that, you sum up, all right, the columns accordingly. I've got that sum, and I can always do the other ones as well, like that. So this is the closing interest of the shareholders. They opened with 1.3, they are closing with 1.6, precisely because of course they made profits, and of course there was an increase in revaluation surplus as well as shares. So thank you very much for listening. And I would like to encourage you now to go ahead and deal with the financial position. Please, after having done this work, prepare the statement of financial position. And I know that you can do it because you have done it before. It's not the first challenge, and I don't think it's the last challenge. Thank you very much for listening, and I want you to come up with questions on the other end.